very expensive words are, we have always done it like that. And that gets them to reflect, because those were the words that companies said before they went finally out of business. And there's another breakthrough technology that a lot of people rave and talk about right now, which is, of course, AI. And so I put together this slide showing that in many ways, Web3 and AI are actually opposing, or you could also say complementing paradigms. So whereas, as all of you I'm sure know, Web3 is designed to be decentralized, it's designed to be open, it's designed to be transparent and deterministic. The terms you put in the smart contracts, they're supposed to be executed without interference, right? That's open and deterministic. And of course, Web3 upholds the idea of data ownership, data protection, and even strengthens it. AI, on the opposite, is rather centralized. It's mostly a black box where people, even the researchers, I talked this morning to an AI engineer, and I asked him, will we ever be able to understand with deep learning and neural networks how the AI arrived at the conclusion? And his answer was, no, I don't think so. I don't think we will. They said, well, that's going to be a challenge for regulation, or explaining to customers, you have a credit line, you don't have a credit line, the AI said so. Yeah? So it's a black box, whereas Web3 is open. And AI is probabilistic. It's a calculator for words. And of course, it uses all the data it can find, public or private, to train its models. But we're here to talk about Web3, and I'm sure many of you, maybe not all, but many of you know what Web3 is and are experts. But just to recapitulate, sometimes it works, sometimes it doesn't. No, it does. So Web3 is very much a backend revolution, right? People don't necessarily notice because they can use and serve the web. But the new and exciting thing about Web3 is that you can now send digital originals to each other instead of just sending digital copies. And that is huge, because you now can contract, and you can now, instead of saying, I'll send you a copy of my picture, a copy of my file, a copy of my presentation, I am now able to send you the original. And when people ask me, usually not probably in this audience, but when I talk about Web3 and blockchain and other instances, there's always someone in the audience who raises their hand and says, you don't need a blockchain to do that, yeah? So quite aggressively sometimes. And the thing is, I think they're right. I think, except for Bitcoin, my understanding, you can do most anything without blockchains, but, and that's a big but now from a management perspective, but with much higher transaction costs. And if you look at the history of what organizations, what the economy looks like, a main driver of what a company looks like, how it's organized, how it structures, is actually determined by the level of transaction costs. And those are the costs of finding someone to do business with, identifying someone, doing a contract with them, enforcing that contract. So all of that costs time, money, energy. We all know it. So any technology that comes in affecting transaction costs is highly important from a managerial perspective, because it'll likely change your business model. It'll likely change the way you organize work and working together. And it'll influence your ability to produce cash flows. And blockchain is all about, as you can see here, the transaction of property rights, and it enables to go from digital copies to digital originals. Now, the sort of fundamental hypothesis that I sometimes show in the financial industry is the following, that in theory, you have to click, please, yeah. The theory is that currently the crypto, the Web3 market is 1/100th of the global total capital markets, approximately. It's not like totally exact. So, the question I sometimes ask the financial managers then is, I think we can all assume some of that will be blockchainified, it will be tokenized, it will go to Web3, it'll become digital assets. Question is, how much of it? Is it 1%, 10%, 20%, 30, 50%? Because that is your X, that's how much money you can make, and that's when they listen. Yeah? You talk about, the X factor. And I looked this up recently, so even today, we are so very early if you compare crypto and internet adoption. So internet 1 to Web3 wallets and adoption, we are in 1998. Now, all of you probably here are too young to remember 1998, but I do. I was invited as a young student to the World Economic Forum back then, and there I remember they showed us the internet at a gas station on a terminal screen. So demonstration of the internet, and a technician was there, and we had one search line, Yahoo, no Google. Yeah? And we politely asked, what can you do with this new technology? And the technician said, you can search. And we were like, search what? You can search anything. And I distinctly remember walking away being totally unimpressed. I remember that, saying, no one needs that, you know? And then a breakthrough moment occurred, the Netscape moment, meaning that a new user interface came along that enabled the average person out there to very conveniently and easily use the internet, and that's when it took off, and that's when it disrupted all the business models. And I think Web3 is still lacking that Netscape moment. It's a pain to use for the average person. It will never go, in a mass adoption unless we find more convenient ways to use it. And the same with AI. AI is an old story. Like all the technical colleagues of mine, they ask me, what's all the rave about AI suddenly? We've been working on that for decades. And I tell them, well, it's ChatGPT. It's a user interface that's so simple and convenient to use that everyone can, and now it's taking off. And I'm sure we will have that in Web3, but I don't know when, and I don't know how it'll come to us. Probably maybe through one of the bigger tech players, which would be a bit antagonistic to the idea of decentralization, but we'll see. I am convinced without more convenience, the huge benefits Web3 enables us may not be reaped. So another statistic showing adoption is happening is that in the US, cryptocurrency owners are quite substantial, between 20 million in 2022. And what do they own? Well, they own Bitcoin and Ethereum. And I find that a lot of people don't understand this, whether in Europe nor in the US, is that their purchasing power is actually, obliterated, which of course is one of the main arguments, at least for Bitcoin, because I think a good way to think about money in general, is to think about money as a saving technology for the time and energy you spend on something. You get compensated in money, so you need to save that. And the saving tech we have right now, fiat currencies, well, they work like this. That's their performance. It's not as drastically for the euro, but it's also, a downhill curve. And so that is a saving tech that would, in theory, be able to protect that. And again, on adoption, so this is a picture, Lukas Ruppert, I don't know if Lukas is here, I don't know, but he sent me this from New York to tell me, look, in New York, adoption is happening. This is a museum where they have a QR code, and you can just scan the QR code and have an NFT. And that, with all the use cases I see, I think that's the single best thing an organization should do right now, because it's low threshold, there's no harm done, you can experiment with it, and then you will have a direct connection to your community, to your fans, the people you want to engage with, and then you can start to play with it. And it's not difficult to set this up, and every company should probably do that. So Lucas also sent me this, Times Square covered in NFT commercials. Yeah, and so the different components, of course, I think many of you know this, the tokens, the DAOs, and of course, smart contracts. The idea, I think, especially of smart contracts, is to bring down transaction costs quite substantially in a similar way that a vending machine does that. So compare having a kiosk operated by a human on a train station versus a vending machine. So the vending machine is available 24 hours, 7 days a week. It doesn't sleep, it doesn't get exhausted, it doesn't pay social benefits, and it's therefore much cheaper and maybe also faster than having a human give you out change, etc. And that's what smart contracts do. And of course, that's going to be huge for business processes. And so this innovation, in theory, no intermediaries or intermediaries that cash out less than the current intermediaries is quite big. And of course, this is what Web3 makes obsolete. In the end, it's very much happening in the back end, and I'm thinking about what could convince people to go that way. And I think one pain point everybody experiences is actually another username, another passport. When you register for a service, so I already actively look for, can I connect my wallet? Because then I won't have to fill in everything again. So that's a convenience aspect that I think might drive this kind of adoption when you are able to not log in with Google or Facebook, because then Google gets access to all your data. And who wants that? Read through your emails. Ideally, you want to be in direct connection with any front-end apps that promises to offer a service. Now, interestingly, I recently learned about Eroom's law. I'm sure you all know Moore's law, but Eroom's law talks about the fact that the cost of developing a new drug doubles every 9 years, and it also slows down. Why is that? We have great breakthroughs in pharma and biotech. We have CRISPR, we have computer science and biology, we have AlphaFold. We have great breakthroughs that should make it faster, right, to develop new drugs. But the opposite is happening. And Eroom's law says, well, it's the cost of transactions. It's the cost of sort of exchanging IP, and maybe DAOs can help here. So a DAO is, as you know, quite the opposite of a traditional organization. It's democratic, not hierarchical. It's based on voting of everyone. Decisions are executed and implemented automatically, and the activities are transparent and public. So I think it's going to be exciting also for auditing firms like Deloitte, KPMG, because now you can do real-time auditing, right? Everything's transparent. You can sort of don't have to do this on a yearly basis. Any members of Pretzel DAO here? Yes, so you know this, a screenshot from Pretzel DAO, and you can see up here a wallet is connected. So here you see all the proposals that you can vote on and also make proposals. Now, the question I'm asking myself from an organizational perspective, it's of course great, it's very democratic, but this is also transaction cost intensive, right? To have everyone vote on everything. So I am expecting to see some hybrid form emerging where you reap actual transaction cost benefits. But DAOs are growing in every area. We'll see, I think, many successful ones. We'll also probably see even more unsuccessful ones. And the interesting idea about this is that you can now suddenly incentivize people to play for your team, to play on your team by giving out tokens. So you've given out a POA. This conference has just given me a POA, I think, to all of you. So we are all incentivized, to do good by this conference, to talk good about this conference, to contribute to its well-being, and that we wouldn't be incentivized to do in the same way without sort of now having a token of this event. And if people sometimes ask me, what are the real-world use cases, the applications? I think a lot have to do with tokenization, so the conversion of physical, off-chain assets, real-world assets, and digital assets into tokens. And the recent estimates, this is from this year, is that all asset classes basically will be tokenized, starting with equity, but also alternative assets, cars, investments into startups, things that are off limits for the average person right now. And if that happens, we'll see, of course, new asset classes for new assets that are not tradable, that you cannot invest in currently. And the benefits of blockchain and tokenization very much come down to its democratizing, because it now enables people to invest in asset classes they otherwise couldn't invest. It increases transparency and traceability, which is, I think, both good and bad, right? We are now quite observable in investments. It enhances liquidity, and of course it enables for individuals, but also for firms, diversification in their investment portfolio. And the big investment firms are listening. They are starting to look into how they can offer this kind of diversification to their institutional and high net worth individual clients. And to me, who has hit it on the head is Cameron Winklevoss when he tweeted, not someday, not in the too distant future, you walk into a local coffee shop, purchase a cup of coffee, and buy an ownership stake in that coffee shop. Because, if you look at the World Economic Forum, there's been so much criticism on capitalism, reinventing market economy. And I think here is actually, a glimpse of a solution in that you make consumers to, producers and owners by enabling the tokenization of their business activities. And in Web3, here is the Lux Rare token. You see the green circle. You can see that 75% of all tokens of this token are actually in the hands of the community. So the people that use them, that produce them, that contribute to this endeavor. And that's a democratizing initiative, isn't it? One that could add something to the discussion on how to reinvent our ways of doing business. So it comes down to, when you talk to companies, when I talk to companies, it comes down to these things. Why should we use Web3? You'll have more automation, unified data structures, faster processing, real-time decisions, real-time reviews, and more efficient management of your data. And of course, Web3 can make everyone more or less a venture capitalist. I could decide, and I would, yes, cool, if you offered that I could buy 10 minutes of your time, I would buy it today. I would wait. What happens to Jesko? I'm sure he'll do great. And then I would cash in, 15 years down the line and say, hello, remember me? I have this token. I would like your attention for 10 minutes. Or, if that gets around, you can buy 10 minutes commercial time at an independent TV series. If you think that series will go big, more people will watch it, and then you cash in when actually millions are watching the show, right? So it enables us to make more bets on whatever we think is going to be valuable. And we see, this already put in action. So this Andy Warhol, which cost $6 million, was tokenized by the Singaporean auction house Mecanas. And the original owner, the light blue is the original owner, is still an owner, but there are now 100 new investors who could probably not buy an Andy Warhol and go into this asset class, but they now can because it has been tokenized. So those are actual use cases. And the next nice thing is that, of course, with a smart contract, you can put in the smart contract, and OpenSea does this, for example, if you trade on the platform OpenSea, that every time your creation is sold, you get an artist cut. So when something rises in price, as art sometimes does, but even if it doesn't rise in price, it's attractive because you as an original producer creator are compensated multiple times, not just once. And that is good news for a country that is all about creation, producing, manufacturing, Germany and continental Europe. I think that's very good news for our economy, because it doesn't just apply to artistic and creative goods, it also applies to cars, it would apply to luxury goods, it would apply to, where do I need to point this to make it work? To apartments, to houses, to collectibles. I don't know, is the battery weak maybe? Shares of company. And of course, tokenized assets in the real estate realm. So many companies are already offering that. And I've listed some of them here. So you can invest in real estate in residential buildings, in commercial buildings, in multi-family buildings. Some even offer you the opportunity, you buy a token today, you will be paid a fraction of the rent today, which I think is psychologically very, very tempting. And I personally was won over by the slogan, own a piece of real estate in the city that you love. Because admittedly, I've always wanted to feel like I own some real estate in London, and I can't afford real estate in London, but I can now buy it for 50 euros, a little token, and it makes me feel good, and so I think they've done that right. Of course, there are some barriers. Why don't we see more widespread adoption? And we certainly are in a bear cycle right now. I'm sure we will come out of it. There are developments happening, as is always the case with new technologies, but we do have some barriers. I think the number one barrier is the convenience issue, and that the average person cannot onboard, with all the marketplaces now being under critical view, and then it's very tedious to set up and manage your own wallets. It's stressful. It's not an enjoyable experience. So that is my number one concern. But a lot of companies are working on that, and we see with the big tech companies, they all have pilot projects, all of them, And some, like Starbucks, for example, have recently onboarded some of their best customers into Web3, but they've done it in a way that the customers didn't even notice that they were now on Web3. They allowed them to use the credit card. So the projects I see happening with firms, they try to make it as convenient as possible and keep people away from having to sort of type in an alphanumeric code to send stuff anywhere, because it's like the early days internet when you wanted to go to a website before Netscape, you had to type in the DNS address, and that wasn't fun. And only when you could do it with real words, let's say I want to go to spiegel.com, is when people paid attention and it took off. So that is my number one concern. So we also have, of course, the lack of registration and legislation, which is not mature enough, which is the first red chart. And Philip Mau is sitting up there, and he can tell you all about it, because he's my good colleague from TUM and a professor of legal studies and blockchain expert. So I don't know how soon we will see this, but I can tell you that the theoretical potential we all know about, I talked about on saving transaction costs, it will only come into effect when we have security and certainty and reliability on the legal side, and therefore I hope that we get to that sooner rather than later. Yeah, with that, Jesko, I hand over back to you to stay to time, and thank you very much. You can contact me on LinkedIn if you want, or under my email, welpe@tum.de, and I am sure we will see each other and cross paths again somewhere in the Web3 community.
Thank you so much. First of all, we still have some time, so if anyone wants some questions to be asked, raise your hand and I will come up. And I also want to give you a small present from us.
Nice.
Also, every other speaker I just forgot also will get a present.
Oh, I love this. TUM blockchain can credits. That's going to be my morning.
Anyone has some questions he wants to ask Professor Welpe? Down there.
Do you think there's a disconnect between companies wanting to use blockchain services and DAOs? So they don't want to get involved in voting, they don't want to get involved in tokens. Do you think there's a disconnect between what DAOs are trying to offer?
Yeah. I think, mic on? Sorry, yeah. The question was, is there a disconnect? Do companies want people to vote? No, they don't want people to vote. I mean, the current board of a company, they not in and out of itself say, let's vote on everything. So companies do usually, is they have an economic gain from that. So the gain could be that talent demands that, or certain talent demands it. Or gain could also be, as is the case currently in the pharmaceutical company, that the people involved say, this is a more efficient way for that particular task to organize ourselves, which apparently is the case for some health DAOs for rare diseases, where they say, look, rare diseases are not economically viably addressed with big pharma because the markets are too small. But if we had set up a DAO where everyone who has a say on this rare disease, because they're a partner, a parent, a doctor with a special interest, or anyone who says, I want to help, is welcome and can contribute with low barriers of entry, then suddenly that organization becomes more efficient. So for me, a DAO is an organizational innovation. And you always, as a leader, as a manager, have to decide for this task that we are, that we need to do, what is the best way to organize? And the hierarchy is great, when you need to be fast, when you need responsibility. And I would think that the best performing DAOs, because DAOs are just about how organizational forms are created, that the best performing DAOs would actually be able to reflect and say, look, for this task, we should actually organize us as a hierarchy. And for another task where you collect everyone's information, let's democratically decide, we will be a hierarchy for this, and let's democratically decide we will be the opposite of a hierarchy on this task. Because if you can't adapt the organizational structure to the task, I think you go out of business.
Hi, my name's Chris. I work for one of these pharmaceutical companies that's focused on rare diseases. And one of the problems that you showed with the eRooms law is that it costs so much because there's so many failures. Do you have any thoughts on how Web3 or DAOs can kind of, reduce the risk involved in investing into drugs for rare diseases?
I mean, Web3 comes with decentralized risk assessment. That's so the transaction costs become much lower to ask many people's opinion and input. Some questions improve when you ask anyone's input. Other questions do not improve when you ask everyone's input. So I don't think there's a one-size-fits-all answer to that. But this is the pharma industry, I learned this recently, is actually making use of DAOs, and for that very reason. And my understanding, probably you know much more, my understanding was that it's due to the complicated processes of IP transfer. That is, so when you want to collaborate, you need to have IP in one organization, and this is so complex, apparently, in the pharma space that people don't do it due to transaction costs. But you know, there's so many technologies that will help with you know, pharma. We should see an increase instead of a decrease, you know, just from the tech development. But the notion is that bureaucracy has gotten so out of hand that they are actually stifling innovation in that area.
Understand it very well.
You work for? Which DAO do you work for?
I don't work for a DAO. I work for a big pharma company.
Pharma, okay.
Yeah, I'll tell you later.
Sorry, does anyone else have a question? Raise your hand. Now's your chance.
Thanks very much for your talk. I would like to hear your opinion on, you know, you brought up tokenization as a big value and us becoming investors as well. But, you know, the way I see it is it's a way for us to become risk investors. And if you look at the NFT market, where the bubble burst, like most people that were in that market lost money. There were like top 1% or maybe even less that got money out of there. So it actually was like a force to strengthen inequality. And it actually is something for the crypto market as a whole, right? Most people invested in crypto are in the red.
Right now, yeah. That's, I think, very true, and that's the reason I think why we really need regulation, because I think in a way we have the worst of both worlds. We have centralized marketplaces that sell NFTs, that sell, you know, cryptocurrencies. They're centralized with all the disadvantages of centralization, but they don't even have the benefits of regulation. They're unregulated, centralized organizations, which also historically, you know, 100 years ago, you know, misallocated investments or increased inequality. So I'm looking very forward to regulation being put in place, standards set, oversight of activities that you do, hopefully in a way that it doesn't slow down, you know, the gains too much, that we can't use them. But the average person certainly is unable to check the liquidity reserves of organizations, or, you know, how serious someone was who offered an NFT. What is an NFT legally, you know, depending on what the utility or the asset backing the NFT is. So I think, you know, Philip, you said 3 people knew how to discuss. That's my impression too. Very few will be able to answer these questions, and they touch legal aspects very soon. So I've worked with companies on Web3, and so first, you know, they have to understand. So I can do that. But when we want to start a pilot project, you need very urgently the legal side, someone who explains to an established firm, what does that mean legally? What are we getting into as a company when we give our tokens? What is someone getting into who's buying that? Those are legal questions. And you need a tech person as well, of course. So business, tech, legal, maybe a designer, and then you can do a pilot project.
In fact, I agree on the regulation. Not sure if it will solve the inequality issue, but
Can I just say, I think inequality is best addressed by, of course, education. I think, you know, people who makes money is people who have other better information. That's why we have rules for insider trading in the regulated stock market. We don't have that in the same way in this space. So it helps, it doesn't eliminate it. And the other thing is, by the way, I find looking at AI, so it's not a talk about AI, but, you know, the studies on AI right now done in companies that I'm aware of, they show something very positive. They show that AI helps people who are bad at their jobs. Like me, I always wanted to be able to use Excel, you know, with all these formulas, and I never could. And I watch my doctoral students, some of them are very talented, and they go da-da-da-da-da, and then they have all these things. And now I can. We say, hey, I talk in German. I tell it, make me an Excel code that I can copy. And that's sort of mirrored in the study. So when you do longitudinal studies, you see two lines, and over time, they near to each other, indicating that AI is helping people who are inexperienced or not good at their jobs, and those were desk jobs, of course, and legal jobs. So maybe we'll see something similar in the financial area, that we get some support compensating for the lack of inexperience through the help of AI.
If anyone else is still interested, I think you were going to stick around a little bit, and you can ask her some questions. So I would please.
One thought, maybe one last provoking thought. Well, we need to challenge ourselves as university. I find fascinating these learn to earn models, where you actually don't pay the person teaching, you pay the learner. Because that's a pain point, and pain points are always where things get adopted, right? And I can assure you, a lot of companies, and I teach in many programs, I give talks, and they usually tell me, great program, and the students love it, but we don't see effects in our organization. We don't see, how they are different after they come out of this and that MBA program. And so I think the idea to align this more closely, the interests of an organization that pays, a DAO that pays, an organization that pays, some money to acquire a skill that makes a difference in their organization. I think that's a legitimate interest. And if we see more models telling someone who says, I want to learn X, Y, Z, and then since there's so much information today out there on how you can learn, there's really no limit. You can learn anything online today. And you find a way to learn, and then you make some kind of test, show that, yes, you have understood it, you can make a difference in the organization. You could even measure, do your team members see a difference? And then you are paid quite a handsome sum as someone who has learned. So incentivizing learning, incentivizing peer learning, which is a major form of learning, I think is interesting for my industry, the education industry, universities, and I'm curious to see if that model will be adopted also outside of Web3. It's currently, of course, in DAOs, it's practiced, but whether that'll catch on outside of Web3 organizations.
So sadly, we don't have any money to give away if you learn something today, but I hope you learned a lot. And now give a big applause to Isabell.
And then have a nice break for 10 minutes.